Thanks for joining us. I'm Marlon Boulding with you, and happy Monday. Well, we're going to take a look at the setup for today's trade. Mark ran through some of the overnight prices for you, and just had a new little tidbit that came across the wire as I was heading down to the studio, and it features another overnight export sale, in this case, over the weekend. And USDA says, drum roll please, we actually had sold some soybeans, this time specifically to China. We actually mentioned them by name, and it was 123,000 tons of soybeans that were sold to China. So we'll see if the trade can capitalize on that or not. Let's take a look at what the overall market did do in the overnight session here, shall we? Let's go to our quotes provided by Bar Chart. Well, as Mark mentioned, corn was flat, December unchanged, March was down just one tick, so very sleepy there. Let's look at soybeans, what happened there overnight. A little bit of pressure. November was down 2.5 cents at 13.37 3/4. It's off of its overnight high by about 7 cents and closer to the low. We're within about 2.5 cents of the overnight low there. As far as the soy products go, the soy meal, the October was up 20 cents. December was unchanged. In the soybean oil trade, we had October down 48 points at 62.90. December was down 48, so a little bit of pressure there. On the wheat in Chicago, there we go to the downside again. December down 7 3/4. We're at 596.5. Let's look at the Kansas City market. Overnight, we had the December contract there finishing 10 lower at 736.5. Where is the bottom on this wheat market? Let's look at Minneapolis. And here you had December wheat down 6.5 at 782.5. within a penny of our low of the overnight trade. All right, also on cotton, I want to throw that in there, no extra charge. On cotton, we have the December contract 74 points higher. There's a plus sign for you, 87.18 per pound as it stands right now. And I know we've been talking about it a lot lately, and for good reason. We have the West Texas Intermediate crude. Brace yourself. I hate to say it, it's at 91.90 this morning per barrel. That's up $1.13. We actually got up to 92.05. Let's talk with Brian Hoops of Midwest Market Solutions. That crude oil market is really getting a lot of attention these days here, Brian. I definitely feel the pain at the pump. I'm sure you probably do too when you have to fill up. Let me check on the diesel fuel market and see what's going on there. On heating oil, this would be your ultra low sulfur diesel that trades in New York, and let's see what the trade is doing there this morning. And it's down about a penny and a half at 336.8. So it's kind of holding its own, but there's got to be upward pressure on that diesel fuel market with the crude oil the way it is. Wouldn't you think anyway?
Yeah, good morning, Marlon. Certainly have to think so. You know, we do a lot of traveling on the weekends this time of year, and there is no shortage of cars on the road. It's even with these high gas prices, you see a lot of cars out there, a lot of trucks as well. Diesel prices are nearing $5 a gallon in a lot of areas, and you know it really puts pressure on margins for these trucking companies, and consumers are spending more and more money. You know, our travels have seen prices closer to $4 than they are to $3 at this point. You know, $3.69 up to $3.99 in a vast majority of the areas that I've been traveling, and it it also affects the farmers that are watching this and listening to this program, because this is a very high usage time of the year for diesel fuel with combines and tractors, trucks running out in the fields. You're using a lot, and it is going to creep into that bottom line, no doubt about it.
I thought that would be supportive to soy oil though today. It doesn't seem to be.
Yeah, I thought the same thing. You know, you look at this, what soy oil's been doing, and even with Friday's Notebook Crush report that came out and showed the lowest oil stocks for the month of August in the last 9 years, oil's having a tough time finding any demand or any strength, and this should be friendly for bean oil. A lot of times bean oil will lead crude oil for whatever reason, and the fact that bean oil's not rallying this time of year with that type of fundamental news and maybe some spillover strength, it's a little concerning, because there's a lot of analysts that think there's a large worldwide demand for soybean oil, and that could be a budding bull market, but so far the market really hasn't responded to it.
New crop corn seems to be dragging the bottom of the barrel, but on the soybeans, they're almost exactly the opposite. They've been at relatively strong levels here lately, so you seem to have two different marketing strategies for each of them.
Well, you really do, because corn actually made its lowest close on the weekly charts for this December corn contract since September 20th of 2021. So we go back almost a full calendar year, and you look at where corn is. This is where we were about a year ago. 474 is going to be key support, and I think we start trading below that and closing below it. There's going to be all kinds of stops underneath that, because there's a lot of people trying to buy corn here, picking a bottom in the corn market, and those stops are going to be sitting underneath that, and that likely will lead to a next leg lower for the corn market. But we don't see the demand that we've seen for soybeans that we see for corn right now. Exports had kind of slowed last week with no private sales. Of course, we had a sale of soybeans this morning, a couple cargoes to China, and that was, I think, is going to catch some of the trade off guard. We had not heard any rumors that China was in the market for U.S. beans. They had rumored that they bought between 10 and 20 cargoes of beans out of Argentina because of their new export program, and this should be a little supportive, I think, to the soybean market that did pull back on Friday as we had some harvest pressure come into the marketplace. But soybeans up near their highs, or had been anyway. The corn market is near, as I said, annual lows. So yeah, there's definitely different marketing strategies, especially when you take into account the crop insurance guarantee of corn being $5.91 and soybeans being much less than that.
Right. Okay. We'll come back, and I want to get your thoughts on our livestock trade on a Monday morning when we come back after this. Oh, thank you so much for tuning in here. We love talking with you about the markets on Market Day Report. I'm Marlon Bowling with you, your tour guide to the ag commodities. The gentleman I'm talking to is Brian Hoops, and he happens to be El Presidente of the spot in Missouri, the market. What am I saying? I can't get it right today, Brian. Midwest Market Solutions. I don't know. I've only said it about 9,000 times. Midwest right? Market Solutions in Springfield, Missouri. And there I spit it out. Let's take a look at this livestock trade here. What is going on today for the setup, because we had the big finish last weekend. Triple-digit gains in live cattle. You had December up $1.47 when we went home for the weekend. And on feeders, look at that. October was up $2.60. And the deferreds, November and January, over $3 higher Friday. Then you look at lean hogs, and they were uneventful. December was actually unchanged. The other months were a little bit weaker there, but wow, what a show put on by the cattle market last week there, Brian. I don't know if they can build on that or not. Every time we do this, we say, well, can they do it the next week? And they prove that they can, but sooner or later, one of these times, they're going to run out of gas, aren't they?
Yeah, you have to think so, and here's why. You saw big rallies in the futures last week, contract highs across the board, including front month October, where we're trading almost 187 on the close in October cattle. The cash trade last week was stronger, 182 to 183 in the Southern Plains. So some really strong cash markets, probably stronger than expected. But the futures are already dialed in another $3 to $4 gains this week. And I don't know that that's going to happen. The numbers are certainly going to be tight, and they will continue to be through the rest of this year into 2024. Cattle on Feed comes out Friday, should show very tight numbers once again. But packer margins are really slipping. They're probably down to less than $10 a head profitable margins here. And I think that's going to keep a lid on their incentive to buy cattle this week. I don't know that they're going to be aggressive buyers, and that they may actually start to slow some of their kill speeds, and that will help them regain those margins, and it'll keep the cash markets kind of leveraged down. So I would not be surprised to see, futures up here at these high levels, some sort of hedging program starting to be implemented by some of the feedlots as, they buy puts or sell calls, even straight futures hedges that could take some of the edge off of this futures market.
All righty. Well, Brian, thanks for joining us today. That's Brian Hoops. Midwest Market Solutions. He's in Springfield, Missouri. There, I got it out. And anyway, thanks again, Brian. We'll talk once again here real soon. So that's a look at our markets here on a Monday morning. We'll be off and running in about 5.5 minutes from right now.